Good afternoon, everyone. This is Katie calling in from Premier Marketing. First and foremost, as always, I want to thank you for taking the time to join us today. We are super excited to discuss a home care product through GTL. The home care industry has really changed. Of course, everybody has watched the news, is getting the calls from the clients asking about how do I stay out of a nursing home. We're always out there looking for great products, and when Home Care Secure came across our desk, we were extremely excited. This product is multidimensional and a little different than the normal home care that we talk about all the time. So we brought on a group of experts today. We have Nick and we have Liz, and they are going to review the product and tell you all the ins and outs. So with that, you ready to take it away, Liz?
Sounds good. Well, greetings and thank you so much for the warm introductions. As Katie had mentioned, my name is Liz Christopher and I'm joined today by my colleague Nick Polish. And we are thrilled to be with you to introduce an innovative solution which combines insurance with navigation and advocacy resources. Now, you don't often associate insurance with innovation, but after today's call, we hope that you come away with just that. A different way to think about insurance and a robust offering to enable your clients to realize their dream of aging at home as safely, as independently, and as long as possible. Now, before we get into the product details, I did want to share just a little bit of background and context on why we designed this solution offering. So all of our employees have either been a caregiver or have had to search for caregiver services for a family member or a loved one, as I'm sure many of you and many of your clients have had to do as well. As Katie just highlighted, we know the majority of people want to age at home now more so than ever, yet the emotional and the financial burdens can be overwhelming, both to the individual and to their loved ones. And in addition, the healthcare system is so disjointed and fragmented, especially within the short-term and long-term care spaces. And if you couple this with the misunderstandings and misperceptions of what Medicare will cover, it's no wonder that there's a problem. So did you know that the average person will consume roughly $50,000 in unreimbursed custodial healthcare expenditures in their lifetime, most of which is not budgeted or planned for? It's a massive blind spot for so many, and one which results not only in having to make difficult decisions from where a loved one ages, but also to the quality, to the access, and to the type of care that they may receive. And on a very somber note, these expenditures are the primary reason that individuals file for bankruptcy late in life. And so that's what brings us to Home Care Secure, our integrated solution which combines an indemnity insurance product with navigational and advocacy supports to provide your clients with the tools, the resources, and the financial security to age at home. So at a very high level, the indemnity insurance product has available lifetime maximums ranging from $20,000 to $60,000 in $10,000 increments. The benefit's designed to pay over 50 weeks, thus leading to weekly payments ranging from roughly $400 to about $1,200. And because of the indemnity nature of the product, this money's paid directly to your client. On the right-hand side, you'll see that the Aging at Home Association provides a robust set of tools, resources, and discounts that we've divided into three main areas. So discounts and special values for frequently used goods and services, such as telemedicine and durable medical equipment, care coordination services ranging from online self-service tools to help you make a plan to age in place, up to discounted personalized services provided by a dedicated advocate who's trained in elder care. And then lastly, we also offer an annual total well-being assessment that we developed in partnership with Fidelity Investments and the Stanford Center on Longevity, which really takes a holistic view of an individual in the areas of life, health, and money. So all of these elements work together to educate your clients on the emotional, the social, the financial, and the operational components to be able to age at home. One thing we did want to share is we did conduct some preliminary market research with one of the nation's largest retiree exchanges. So as you can see from the chart, the respondents placed an equal value on the association benefits of support, planning, and discounts on par with that of the cash indemnity benefit. These respondents reinforced our hypothesis that Home Care Secure and the Aging at Home Association are highly valued on an individual basis, yet when you combine them, they represent a very powerful and market differentiating solution. And with that, I'll turn it over to Nick to provide us details on the product.
Great, thanks, Liz, and hello, everyone. So I'm going to spend a few minutes on this slide addressing 3 questions that are likely top of mind for each of you. How do I qualify my clients? What are the key product features? And how do they qualify for the cash payments? So let's work our way left to right. First, from an eligibility requirement perspective, there are 3. First, your client must be entry age 35 through 84. Secondly, be a legal resident of one of the 22 states where Home Care Secure is currently available. And we'll look at the states in a moment. And then finally, be able to pass a 5-question simplified underwriting process. And passing is the ability to answer no to each of the questions. And we'll review the questions in a few minutes as well. Now turning to the key product features. Similar to other products in this category, Home Care Secure utilizes entry age pricing and is guaranteed renewable. So let me use an example to help bring that to life for you. Let's take an example. 2 males both purchase a $60,000 policy with the inflation rider. One person purchases at age 50, one at age 60. So the person who purchased at age 50, their monthly premiums are $72 for the life of the policy. The person who purchased at age 60, their monthly premiums are $107. Now, at age 80, both will have paid $26,000 in premium. However, the individual who purchased at age 50 had 10 additional years of coverage and has an available lifetime maximum benefit of $103,000 because of the inflation rider, while the individual who purchased at age 60 had the policy obviously for 10 fewer years, and their available lifetime maximum benefits $85,000. Now, to have the policy keep pace with wage inflation, there are 2 mutually exclusive options available: the inflation protection rider and the $10,000 buyout. So let me give you an overview of each. First, the inflation protection rider. That's a decision your client will make at policy issue. The interest rate is 3%, simple interest, and it begins in the 7th policy year. And there's no limit to the increase in the maximum while the policy is in force. So for example, if your client purchased a $50,000 policy with the inflation protection rider, after 30 years, it will have grown to $86,000. Now, the alternative to the inflation protection rider is the $10,000 buyout. And the buyout is available every 3 years or more. However, it is subject to a lifetime maximum benefit of $60,000. So to continue with that $50,000 example that I just used with the inflation rider, someone with a $50,000 maximum would only be able to buy up 1 time because they'd then be at the $60,000 cap. Now, the lifetime maximum benefit grades over a 5-year period. So on the first day of the first policy year, your client will have access to 10% of the lifetime maximum benefit that they purchased. In the second year, it grows to 20%, and then beginning in the 6th and subsequent years, it's 100% of the lifetime maximum benefit available. So what was the rationale behind offering this feature? Well, there were really 3. One, it allowed for simplified underwriting. Secondly, more competitive rates. And then third, while none of us can predict our healthcare future, individuals generally purchase these type of policies 10, 15 years or more before they anticipate needing the cash payments. And obviously in these situations, the grading period is not applicable. The final feature that I'd like to share with you is the multi-episode of care. And basically the headline here is that Home Care Secure can be used episodically over a period of time for acute health conditions. And 1 episode of care ends when your client recovers and does not need home health care services for a minimum of just 30 days. Which then leads to the next logical question: how does an episode of care begin? So essentially, there are 3 qualifications. First, a licensed healthcare provider, and it's important to note that while it can be a physician. It doesn't have to be. It could also be a registered nurse or a licensed social worker. So one of those healthcare professionals must certify that your client suffers from either a physical or cognitive impairment. Physical impairment is the inability to perform 2 or more of the activities of daily living, eating, bathing, transferring, walking, and so on. Or cognitive impairment would be a dementia diagnosis, for example. Second criteria, your client needs home healthcare services at least 3 times a week, and each visit is at least 1 hour in duration. And then finally, all of this is documented in a plan of care. And as Liz mentioned earlier, because of the indemnity nature of the benefit, the weekly cash payments are made directly to your client. And in the majority of cases, the value of the weekly cash payments will likely be greater than the cost of the delivered home healthcare services. And in these situations, your clients have complete and total flexibility as to how they use the excess funds. So let's take a look at the geographical availability of the product. So the 22 green states that you see on the slide are the states where Home Care Secure is available today. The gray states come in 2 flavors. The states with the abbreviation within them are states that we will be filing and bringing online throughout calendar year 2022. And those that are blank, so to speak, are ones that we'll bring online in 2023 and beyond. And let's take a quick look at the underwriting questions, the knockout questions. So as you're skimming them, let me leave you with some thoughts. The process is simple. It yields real-time determinations at the point of application and is easily attainable. You note that our questions are very narrowly scoped, and based on our expectations and frankly experiences to date, 90% or more of your clients will qualify. So with that, I'm going to turn it back over to Liz to cover the Aging at Home Association.
Great, thanks, Nick. So as we highlighted, we were very purposeful in the design of both the product and the association. Since we've been in this position ourselves, either being a caregiver or having to seek or search for caregiver services, we know how overwhelming the process can be. And in addition, with our vast experience in the insurance industry, we've seen far too often that people don't learn about their insurance, right? They don't understand their benefits or their coverage levels until they're sick and at their most vulnerable. Thus, they're usually not equipped to make the best decisions. Therefore, we wanted to bring together the tools, the resources, and the navigational supports to help individuals and their caregivers in advance of their time of need, so they have increased peace of mind. And as part of that peace of mind, we wanted to ensure that our association provided valuable benefits and discounts that aligned with our mission to age at home. And the beauty about these benefits and discounts is they're available not only to the policy holder, but to their immediate family members as well. So just to give you a little bit of flavor of the types of offerings that we have, we do provide free, unlimited telehealth visits through our partnership with MD Live, access to discounted care coordination services. So it's concierge type services that will help you vet caregivers, help you schedule appointments, arrange for transportation, as well as discounts for durable medical equipment. All of these provide immediate value to your clients, totaling several $100s in savings per year on average. One of the benefits, though, that we feel is truly differentiating involves our unique partnership with Wellthy. It provides care coordination services, and Nick actually has a personal story on this front that he'd like to share.
Yeah, my personal Wellthy story will resonate with many of you, as either you personally or your friends and your clients experienced similar situations. So several years ago, my dad passed away, and my mom made it very clear that it was her wish to continue to live in the home that she raised her family. But over time, she was becoming increasingly socially isolated, exhibiting memory loss, and was clinically depressed. So something needed to be done. Well, like many families, I live several hundred miles away from where I grew up, and I'd been out of the community for decades. And thankfully, I had Wellthy to turn to. So I was paired with a care coordinator, and all of their care coordinators are masters in social work with a focus on elder care. We had a couple of phone conversations where I brought her up to date on the situation and what we were trying to accomplish. And out of that came a fully vetted care coordination plan that had 3 components to it. First, it addressed the immediate need, and that was keeping my mother, in her home. And to that end, she identified resources in the community that allowed her to continue to safely live at home. Recognizing the trajectory of her health, she also researched and vetted within a 25-mile radius assisted living facilities and nursing facilities with a particular focus on those with memory loss units. And then finally, she researched and identified a financial aid program run by the Veterans Administration, with which my mom was eligible because of my dad's military service. So because of these efforts, my mother was able to live at home for an additional 2.5 years and is currently a very happy resident in one of the vetted assisted living facilities. And I often think what would have happened if I did not have Wellthy to rely on. And there would have been certainly much anxiety and sleepless nights. We would have undoubtedly made mistakes. And at the end of the day, my mom would not have lived in her home as long as she did. So I hope this experience brings to life the value that Wellthy and its care coordination services can bring to your clients in their time of need.
Thanks, Nick. So with the insurance and the association, what does all of this mean? So let's meet Retiring Ray, which is a persona that we created to bring all of these elements together and make them real for you. Ray purchased the $50,000 policy with the inflation rider when he was 65 at a monthly premium of $109.57. Now, we were very particular about selecting this level of coverage for our example, because if you recall earlier, I had mentioned that the averaged unreimbursed out-of-pocket custodial expenses are roughly $50,000. And this is an expense that 2/3 of us will encounter in our lifetime. At the age of 80, unfortunately, Ray requires in-home custodial care and needs to go on claim. Now, by this point, Ray has made monthly payments in the amount of $19,700. Yet if you look here, Ray has an available lifetime maximum benefit of $63,500, which reflects the original $50,000 policy plus the inflation rider, translating into payments of $1,270 every week for 50 weeks. And since Ray has been a client for 15 years, he's been taking his annual assessment, he's been leveraging the available tools and resources. Ray and his family have had discussions. They know what to expect from a benefit perspective, and they have an aging at home plan in place. And now they're just executing on that plan with increased peace of mind. And with that, I'll turn it over to Nick to close us out.
Great. So the next 3 slides, just to give you a little coming attraction. So talk a little bit, kind of pivot away from the product and talk a little bit about how to help you to market this product. And so on this slide, we'll discuss the addressable market. The next slide, target buyer characteristics, and then the third slide, some use cases. So let's focus on the addressable market. So this is kind of a busy slide, but let me break it down for you. First, there are 126 million households in the United States, and it's our belief that 50 to 55 million of them would benefit from a product like Home Care Secure. So this slide illustrates the number of households in the United States by age, employment status, and investable assets. Each block represents 100,000 households, and the blue blocks are actively employed individuals under the age of 55. Green blocks are actively employed individuals age 55 and older, and then the yellow blocks are retired individuals. Households are grouped into 6 investable asset categories, ranging from low net worth, defined as assets of less than $100,000, and that's the far left, the biggest group, and then the mega millionaires with assets of $3.5 million or more on the far right of the slide. The red dotted box represents our perspective on the households and individuals who would benefit. And basically, it's the upper quartile of low net worth extending to the lower quartile of high net worth. And you might ask yourself, well, why isn't it everybody? Well, on the low end of low net worth, there are going to be premium affordability issues, and those on the upper end of high net worth and the mega millionaires have the wherewithal to fund the cost of home healthcare services out of personal savings. So let's talk about identify some target buyer characteristics. Individuals will purchase home care secure for a variety of reasons, including life stage, financial considerations, and personal expectations and experiences. And it's important to keep in mind that these are not silos, and individuals can certainly possess characteristics that run across the categories. So let's look at each individually for a moment. First, life stage on the far left. Individuals in their 40s likely experienced a loved one, for example, could be a grandparent or a parent or an in-law, go through a physical or cognitive decline. And that's a very powerful motivator. Individuals in their 50s and through their mid 60s are beginning to think about and plan for retirement and what that might look like for them. Finally, individuals in excess of age 65 are considering care options as they age. From a financial consideration perspective, we just learned from the previous slide that 87 million households have investable assets of 100,000 or less. And Liz shared with us earlier that the average person will consume $50,000 of unreimbursed custodial home healthcare expenses during their lifetime. Thus, for the vast majority of Americans, retirement savings are insufficient to cover the cost of custodial home healthcare needs. Educating them on a potential gap in their financial plan and providing them with a solution is the right thing to do for your clients. Finally, lifestyle expectations. We all have strong desire to independently, both physically and financially, age at home. This has always been a strong motivator, but even so in this COVID pandemic environment. So let's take a look at some use cases. First on the left, Medicare. So this is a natural one. And there's really two scenarios within Medicare. Scenario one is individuals aging into Medicare, and then scenario two are individuals already on Medicare. So the first scenario, in aging into Medicare, first of all, in the United States, every single day, 10,000 individuals age into Medicare. And chances are their monthly financial obligation for Medicare will be lower and potentially substantially lower, especially if they purchased a Medicare Advantage plan, than their employer-sponsored healthcare costs were. So here's a great opportunity to educate your clients on the potential financial exposure and redirect some of the premium savings to fill the gap with Home Care Secure. And then for those of your clients that are currently already on Medicare, Home Care Secure is a great reason to check in with your clients after the close of the open enrollment period. And frankly, the first quarter of the year is the perfect time to do it. Secondly, ACA individuals. So the American Recovery Act, which was passed last spring, increased the premium and plan design subsidies for individuals who earn below 400% of the federal poverty level. Additionally, for the first time, it introduced subsidies for select individuals who earn in excess of 400% of the federal poverty level. And so the thought process or rationale here is the same as those aging into Medicare. That is, here's an opportunity to educate your clients on a potential financial exposure and redirect some of the savings, which are effectively the increased subsidies, to fill the gap with Home Care Secure. And then finally, on the far right, employer-sponsored benefits. For those of you that also perhaps have some group clients, if you've been following the trends and speak with voluntary benefit platforms, you know that the next big thing in voluntary benefits is quote unquote caregiver benefits. But just to give you some statistics, 45% of employees across the country have caregiving responsibilities. The annual cost to employers for full-time employees with caregiving responsibilities is in excess of $17 billion. And that works out to over $2,400 per full-time employee. So it's a pretty significant financial implication for employers. So Home Care Secure is a voluntary worksite offering that benefits everybody in the equation. So first, from the employer perspective, not only are they offering a valuable caregiver benefit that could differentiate them and make them win the war for talent, but it's also not administratively burdensome. For example, Home Care Secure is not an ERISA plan, so there's no 5500s, no summary annual report, no discrimination testing, no minimum participation requirements. And because premiums are paid with a bank draft, no payroll deductions to worry about, and no one to notify when the employee terminates. Now, from the employee perspective, it's a fully portable benefit that fills a significant need in their financial plan. And then from each of your perspectives, think about it. Each employee represents potential multiple sales opportunities when you consider not just the employee, but also their spouse, their parents, and any in-laws. So let's talk about the opportunity. Why introduce your clients to Home Care Secure? Well, there's opportunities for your clients and for each of you. Each of you are trusted business advisors to your clients. So here's an opportunity to reinforce that position by educating them on a potential gap in their financial plan and introducing them to a solution to protect their future and provide them with peace of mind. We realize that your time is your most precious resource. Thus, we designed Home Care Secure to be easy for your clients to understand, affordable, experience high acceptance rates, 90% or more, and save time with an efficient enrollment process, which takes literally 10 to 15 minutes to complete. So let's talk about resources and support. So all of us at Premier Home Care Genie and Guaranteed Trust Life are laser focused on your success. We've developed a number of client-facing materials, such as an explainer video, a product brochure, customizable postcard, and infographic, as well as other assets to assist your marketing efforts. As well, we're fully leveraging GTL's technology platform, including eApp, which is their online quoting and enrollment tool, and GT Link, which is their agent portal. Finally, the bonus program. So we have been running a bonus program since October, and it runs through March of this year, and you're all obviously still have time to participate and benefit from it. And remember, the bonus program is incremental to normal sales commissions. So it requires a minimum of just 5 Home Care Secure sales in the 6-month qualifying period, October 1st of last year through March 31st of this year to qualify. And if you sell 5 to 10 policies, you'll receive $25 per policy. If you sell 11 to 25 policies, you'll receive an extra $50 per policy. And then if you sell 26 or more, you'll receive a bonus of $100 per policy. So what's next? If you're currently appointed to a GTL, congratulations, you're ready to start selling Home Care Secure. If you are not, I have Katie's contact information here. Please reach out to Katie, and she and her team will get you, contracted with Premier and appointed with GTL, and you'll be ready to start selling Home Care Secure as well. So with that closes our formal agenda, and thank you for your participation. And we look forward to taking any questions that you might have now. I'll turn it back over to Katie to moderate the Q&A.
Thanks, Nick. Thanks, Liz. That was great. A couple questions that have been typed in. Do the premiums continue when the client goes on claim?
Yes, they do. There is no waiver of premium built into the policy.
Another question is do the premiums increase over time?
They do not. So and it's based on your entry age. So the younger your client purchases, the lower the premium will be, and they keep that premium rate for as long as they hold the policy.
Well, I think we handled it. You guys went through so much information, and we really appreciate it. And for each and every one of you that attended today, I really appreciate you taking the time. You saw my contact information, and as always, please feel free. Give me a call here at Premier. We can run through any questions we have, and if you do stump me, I'm sure that Nick and Liz would be more than happy to get on the phone with us and walk us through anything that we may have. So with
Absolutely.
that, Liz, Nick, thank you so much.
Thank you.
And I look forward to hearing from everyone soon. Have a great day, guys.
Have a good day.